Hello traders, Gary Wagner for Trending Markets, approximately 10:45 in Honolulu, 4:45 in New York on Thursday, 15th day of October, 2015. Interesting and incredible recovery in the U.S. equities markets with triple-digit gains in the Dow Jones Industrial Average, trading up over 200 points, 217, well above 17,000 at 17,141. When we look at our daily chart, you can absolutely see this being the last 3 days of activity within the Dow Jones Industrial. Of course, we had the market 2 days ago showing first signs of weakness, a tremendous sell-off yesterday, but the recovery today takes us really at the highs of the beginning of the sell-off, so we are back into really positive territory for the week. This being a daily chart, you can definitely see that when we pull up our weekly chart, our weekly candlestick chart, and we've done that just here. You can see these lows here that we received at the beginning of the week and specifically yesterday, and this incredible recovery today. It tells me that this market has further to go on the upside. Of course, we pulled profits earlier this week. We did not weather this drawdown, but we certainly didn't enter this market on yesterday's close to capture any of this gain. I wanted to really let the dust settle to see if we were going to get any more retracements within the market, or if in fact we would see this market begin to move back up. Now, we talked about the fact that we're really focusing in on a couple of different moving averages, our 200-day and our 50-day moving average. 50-day being in red, 200-day being in blue. We just looked at on our gold charts the fact that gold is actually now traded above a 200-day moving average. Another interesting thing is taking a look at the dollar. We've got interesting action in the U.S. dollar, and we'll look at that in a second. But without a question of a doubt, we wanted to see yesterday, and that was my criteria, was whether or not we would see this market break below this particular level. This level right in here, of course, represents that short-term 50-day moving average. My sense was a break below that would signal a sell signal, and obviously holding within this area shows us that this 50-day short-term moving average has really provided tremendous support for the marketplace itself. My sense is right now that if we get any kind of follow-through in that, the next real level we want to look at is got to be this 200-day moving average. So we'll have to see how all of this pans out, but this is an extremely bullish move. This upside move is absolutely significant when we consider the fact that the S&Ps today gained about 34 points, 1.73% to close well above 2,000 at 2018. That's extremely bullish and warrants our attention to enter that market from the long side. When you look at these short-term charts, this being 240 minutes, so we've got 4-hour bar charts. Take a look at the last 4 hours of trading in this market. Tremendous upside move. Now, the same cannot be said for the dollar. Interesting thing going on with the dollar. We'll look at this chart in a second, but dollar up slightly, up about 0.5% on the day. But what is most interesting to me is when we look at the actual moving averages in here, and we've got a scenario which is basically called a death cross. There's the golden cross, and the golden cross in essence is when the short term moves above the long term. The death cross, however, is the exact opposite. I've got two different moving averages. One of them is a 50-day. The other one is a 200-day moving average. When we look at these two moving averages, we did see these markets cross. Take a look at it right there. Now, each and every time we have seen a death cross in the market over the last couple of years, and these are really long-term studies because we're looking at a 50-day and a 200-day simple moving average based upon the close. Whenever we've seen this activity happen, it really was pretty significant of lower pricing ahead. And traders, just to give you an idea of the significance that this can have, take a look at, as I said, we were looking at a death cross, but look at this golden cross that you get back here in July, in which your shorter term 50-day moving average crosses above the longer-term 200-day moving average, and that signaled probably one of the most absolutely the most dynamic move we've seen this year, but one of the most dynamic moves ever witnessed within the dollar itself, because over this period of time, back in 2014, not 2015, but beginning in July of 2014 into 2015, this particular golden cross signaled a move from about 80 on the dollar index all the way up to 100, where it found some real resistance and has been tracking lower. So this particular cross could absolutely be significant. Traders, it's something we're going to keep our eye on and look at very, very closely, because it could be signaling a major decline in the U.S. dollar. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up in Trending Markets. Bye-bye.